After platinum recently witnessed this bullish breakout out of this symmetrical triangle, we have now seen the beginning of a major sell-off. And so in today's video, we discuss why this happened and what might be happening next. Because we at Kronos believe this could actually be the beginning of financial crisis 2.0. And so let's first have a look at the fundamentals. Obviously, we do have persistent deficits here at platinum. We have not seen that actually changing and has been the case for 3 consecutive years now. And obviously, those supply deficits are a bullish factor. If you have less supply than demand, then obviously that puts the price pressure to the upside. But at the same time, we are also seeing that we are not only having supply deficits, we are having those supply deficits because of structural problems in South Africa, where the majority of platinum is actually sourced. We do have production challenges due to no major new mines actually being basically opened. And so we do have limited recycling, we do have production challenges, and that is obviously capping supply growth. And so we are having those supply deficits because of those supply problems that we're seeing. But we're also, in addition to that, having rising demand because obviously platinum is a really important metal concerning automotive, jewelry, industrial, and also the investment sector is obviously one of the drivers that is behind this recent price surge that we've seen at platinum. And also the Chinese are big country that are actually demanding a lot of platinum. And so we do have those fundamentals being quite bullish. And we have also talked about that in the latest video about platinum, that we do are overall bullish, especially concerning the gold to platinum ratio. And historically, we have seen that gold and platinum have actually moved below this 1.0 level. And so we have always seen platinum being more expensive than gold. It has been the case for quite a while. You can see that we have moved here, we have ranged here previous to the dot-com bubble and also previous to the financial crisis. We have actually seen that platinum has been more expensive than, or has been more valuable than gold. But in recent decades, we have actually seen that change, and recently we have now seen this big falling ratio here, and we do believe that is about to continue until we see this actually consolidating here at below 1.0. And so we do believe a ratio of around 0.8, for example, would be a reasonable level to actually see a consolidation happening here at this ratio. It's just the fundamentals at this point that just would suggest we do see this ratio come down a lot more, because obviously platinum is much scarcer, it's much harder to get out of the ground, and there's much less stock of platinum. And so we do obviously have this fundamental factor. That is also why we were overall bullish on platinum. However, it's not that easy, because obviously if you look at history here on the weekly chart of platinum, we have seen those big crashes right here in 2008. We have seen that big crash here in 2020. We have seen that big crash. And that's just due to the nature of those crashes, because they are deflationary. And so when the debt is actually contracting and therefore the money supply is contracting, there's nobody that is buying platinum or any other metal anymore. And we're currently seeing this massive sell-off, not only at platinum, but also at gold and silver, which have been actually surging by a lot in recent days, weeks, months now. And what we are currently seeing is probably, or it could definitely be, the popping of a bubble, as we've seen here in 2008 and in 2020. Now, if you compare what we've seen happening to the gold to silver ratio, you can see the building up phase of those bubbles has seen a gold to silver ratio weakening. Then we have seen this bottom forming out. Then we have seen that reversal to the upside here, which actually coincided to the top being in here at the platinum price. And so whenever you have seen that gold to silver ratio reverse from a falling to a rising trend, then you have actually most of the time seen that top being in and a big crash followed. And not what we're currently seeing is also this similar scenario. We have seen the gold to silver ratio actually falling by quite a lot since May of 2025, and we're starting to see some support here. We are starting to see that gold is actually starting to outperform silver, and when that is happening, most of the times that is actually coinciding to both metals actually falling, not only silver but also gold. And so you do have all of those empirical indicators right now that actually would suggest we do see similar things happening to what we've seen in 2008 and also in 2020. Here in 2020, it was obviously a little bit scrunched or crunched in time. We have seen that procedure happening much faster. We have not really seen the DXY falling quite a lot. We have not really seen. I mean, this was basically also not a bubble really forming out. We have probably seen this crash caused by the Corona crash itself. It was just the narrative that actually caused the crash. And so you really like to take a look at the 2008 bubble, the great financial crisis, where we have seen that inflationary expansion at the beginning. We have seen the DXY also dropping by a lot, which we are also currently seeing here. And we have seen the gold to silver ratio also signaling this outperformance here at the metals. So silver outperformed against gold. We have seen that as well. And so we like to take a look at history always empirically, and the empirical data just would suggest we do see a bigger macro crash happening next. By the way, if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't miss future update videos, and also support us here on our channel. And so to actually end this video, we want to summarize what actually is the most important at this point. We have seen similar things playing out as we've seen it before the great financial crisis. We have seen that inflationary development not only at platinum but also at gold and silver. We have seen the gold to silver ratio fall. We have seen the DXY fall. And we're at historical highs. We have been at historical highs here at platinum, at the gold to platinum ratio, which would actually suggest we do see this actually come down to a level where it's actually fundamentally sustainable. Because we are having those strong fundamentals, we are having deficits, supply deficits. We are having less supply than demand. The demand is primarily driven by automotive, jewelry, industrial, and also investment. And obviously, as the dollar keeps devaluing, as we're seeing this dollar debasement, we are quite bullish generally on those precious metals. However, and this is the big point of this video, even if the fundamentals and all of that is actually quite bullish, you have to keep in mind that we're trading in dollars. And as long as we do see that devaluation here at the dollar actually going on, we can see a sustained rise at platinum. But we are concerned that we are really concerned because obviously if you do see that actually forming to a bubble, which we could actually see right now, this will obviously also lead to a deflationary crash, which we have seen here in 2008. And obviously, as the money supply contracts, we could also see a big, severe crash here at platinum. And so this is really a quite difficult situation, but it's probably wise to not enter the platinum market right now. Obviously, we could obviously have a big reversal coming up next. We could see that price to surge, but we just do have this empirical evidence from history that those price surges have a reason, and the reason is dollar debasement. And when we do have dollar debasement, that historically led to big crashes happening. And that is why we're really concerned and why we believe that the chances for a bigger macro crash are not low right now. Also concerning the geopolitics right now with Venezuela, with Greenland, with Iran. And so Even though we have those big fundamentals, it might be wise to actually wait until we've seen a big crash to actually be able to invest when the prices are cheaper again. But obviously the fundamentals are bullish, and that continues to be the case. So I hope you enjoyed the video. I hope you learned something new. If you did, please make sure to subscribe to our channel and like the video to support us here for our work on YouTube. And also make sure to check out our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.